Give it a couple of minutes before we start. I'm sure people may have some issues in joining the WebEx link. Let's give it a couple of minutes. So good afternoon, everyone. Welcome to the webinar series on ESG, which we started sometime last year. Today's topic is about unlocking the value of internal audit in ESG. I'm sure it's quite a relevant topic. A lot of people will be interested. And ESG as such is a topic which is now talked about in all the corridors, right? So since 2015, especially in the Middle East, many jurisdictions have started something, relevant to ESG in terms of introducing either laws, introducing some guidance, though none of it has been mandatory so far. But over a period of time, what has happened is a lot of things, have shaped up. There are now requirements which are becoming, slowly into, its practice, which will also become mandatory. And that's why we're all discussing this. I think it's very important for internal audit as a profession also to, be aware of ESG developments in the region and also see how internal audit can play a role. Talk to all the stakeholders, support the stakeholders and also play the advisory role on ESG. So in this webinar, we will talk about specifically on IFRS S1 and S2 and how organizations can, better be prepared for navigating on this phase. We'll also talk about, internal auditors as such in terms of how they can play the audit role as well as, the consulting role. We also have an interesting panel discussion. Of course, we'll introduce our fellow panelists, later during the session. But I would also like to welcome Steve Wang, Managing Director from Protiviti US. He is our Global Head of ESG Audit. And thank you, Steve, for joining us early morning from your side. And then we also have Nuthan. Nuthan is our Managing Director from Protiviti India. She leads the ESG practice both for Middle East and India. So on that note, I will hand it over to Nuthan. But as we transition, we have a quick poll question. So what you can do is, as the poll question comes up, you can choose, and as we can keep speaking, and then we'll also talk about the results. So over to you, Nuthan.
Thank you, Sanjay.
And just one more thing, just to add, as you have questions, do put it up in the chat box, Q&A box, which is there on the right-hand side, down. So we will take up questions towards the end of the session so that we don't disrupt the flow. So feel free to, put your questions there. Thank you.
Thank you, Sanjay. I see the poll questions and the results which are out over there. I think the important aspect of this poll was to really understand the current state of your organization on your ESG journey. And I would say almost, 85% has not given an answer, which is really difficult to analyze. But yeah, I would say 10% have just said that they have just started discussing the ESG. So maybe this webinar is really apt and very timely in terms of helping you to understand more on the ESG aspects and how you can shape your organization journey as far as ESG is concerned. So with that said, let me quickly jump into what is ESG. I know most of you will know what is ESG, but I think taking a very quick refresher course on what is ESG. ESG are nothing but non-financial parameters. These are the non-financial parameters which are either possess risk to the organization or they possess opportunities to the organizations. And these non-financial parameters are some of the aspects that a lot of your stakeholders, whether it is your customers, your government, your stock exchanges, your investors are very keen to know because it impacts the top line and the bottom line of the organization. Let's quickly delve into the next slide, Kapil, and see that what are these ESG non-material topics. I think it is very clear the environmental are all the environmental aspects, which is water, waste, GHG, all of that. When it comes to social, it is really about the health and safety of your people. What are you doing with respect to your customer satisfaction? How are you treating your communities in and around, and most important thing is what are you doing with respect to your supply chain. And the G part is obviously every one of you know is much more on the governance aspects, which is board independence, anti-bribery, and also governance with respect to ESG aspects, which is now getting more focus from the governance side of things. Moving to the next slide, let's understand that how are these non-financial parameters really impacting the businesses. I'll give an example over here to say that, a very large MNC which is into bottling, they put up a $85 million large bottling power plant, and after 2 years they realized that the water was not available in that region, and there was a lot of social hue and cry. Since 2002, they put the plant in 2002, 2004, the plant was operating, and after 2004 till 2018, none of the water production happened because there was the legal case put on this bottling company. So if you see the loss that the company made because of water, which is an environmental non-financial parameters, it was the $85 million after 2018 was a stranded asset. No one was willing to buy it. There was a complete production loss for so many number of years. No bottled water was getting prepared over here. As well as if you see the legal case, which went for almost 10-15 years. And the last part is the whole aspect of they had to pay to the communities in and around in terms of making sure that the legal regulation emphasized them to repay the communities in terms of the compensation. So this is what, when we say about ESG as a non-financial aspects, it has a financial implication when it comes to a business. Kapil, next slide. Let's look at some of the other examples when we look at, what could be the other aspects. And I'll take one or two examples over here is, if some of your clients, and I'll give an example, one of our client was into natural gas, and they were trying to put a lot of investment into natural gas, over the period of years. And they decided to make further investment, soon to realize that most of their clients are going to move towards renewable energy. So all of the money that they are going to put into natural gas assets is going to be null and void, will not repay any benefit. Similarly, when you look at the climate change impact, what is it? If there is floods, if there is hurricanes, drought, it is going to impact the physical asset, and that is going to impact your finances. So investors have realized that these financial impacts has to really come out into the public domain, so that a lot of stakeholders understand these aspects before making any investment. And that is how, Kapil, can you go to the next slide? That is how the whole aspect of IFRS S1 and S2 came into effect. Earlier, if you look at the ESG reporting, a lot of reporting had been more in the fragmented way. It had also been more in terms of really looking at only the KPIs in that sense, but the financial impact of these non-financial parameters was not getting reported. And hence ISSB, which is the International Sustainability Standard Board, really came together to say that, they picked up the other reporting frameworks and said that we need to make one consolidated framework for ESG reporting, which will be common across organizations and can act as a baseline and could also give the right kind of information to investors as to what are the ESG impacts and how it impacts the top line and the bottom line of the organization. So that is what the IFRS S1 and S2 standards came into effect. Countries have to align to these S1 and S2 standards. I think it is expected that several Middle East countries would also go in for IFRS S1 and S2. We work in Central Asia there. A lot of countries have already gone for IFRS S1 and S2. Let's spend a minute in terms of understanding what is IFRS S1 and S2. IFRS S1 really looks at the disclosure of sustainability related risk, which is all of the aspects of ESG, and whether it is the risk and opportunities on the business. And IFRS S2 really looks at the climate related risk and opportunities that it possesses. Currently, the S2 is only focusing on climate, but they expect to come up with more specific disclosures, whether it is on water, biodiversity, etc. And as I mentioned to you, the purpose of this entire framework is to show, between IFRS reporting and IFRS S1, S2 reporting, is to show what is the impact that these ESG risks and opportunities have on your top line and the bottom line of the organization. Kapil, next. So as I mentioned earlier, these reporting, IFRS financial reporting and IFRS S1 and S2 reporting will be required to be same across the reporting entity, the reporting period, the reporting timing, as well as the presentation from a currency perspective. Also, they are expecting it to be consistent with respect to data and the assumptions that the businesses are making. So that is how linked these two reportings are going to be, and they will be talking to each other in all sense. Next, Kapil. So as I mentioned to you, the earlier aspects of any reporting was just to talk about simple KPIs, this much water that the company has used, or this much GHG emissions the company has done. Now, IFRS S1, S2 reporting really, as I mentioned, looks at identifying in detail the sustainability risk and climate change risk, and then converting this risk and its impact, whether it is on revenue, the assets and liabilities, the cost, the cost that is really required in terms of in terms of research and development or capex, as well as would there be a change in the cost of capital if there is a perceived risk of the company with respect to ESG. So what I mean to say in one simple word is, this is no more a KPI based reporting. This reporting is going to be out in the market with all your key stakeholders, and hence putting a good lens to it, making sure that the data is accurate, everything is accurately reported, is going to be extremely important for all of you. Next, Kapil. So as Sanjay, started by saying, and he had his first slide, which he says that, there is the ESG guidance, the regulatory mandates are really evolving. And there is the softer approach that we earlier used to take towards ESG, needs to be really passed by. We really need to take ESG extremely seriously and see how we can support our organizations on our journey as far as IFRS S1, S2 reporting is concerned, which really impacts the organization. Next, Kapil. I'll pass it on to my colleague Steve to help us understand the role of internal auditors in ESG. Over to you, Steve.
Thank you, Nathan. So I'm going to jump into understanding the role of internal audit in ESG. But before I do, I wanted to first talk about just some of the different components of an ESG program. So on the next slide, for many of you in which sustainability reporting is a newer topic, or your organization hasn't even started a program yet, a sustainability program can actually be fairly complex, just given that the topics can be fairly broad and can touch a whole lot of different functions within an organization. On one end, you might be talking about water management, and then on the other end, you're talking about climate risk or diversity and inclusion. So the topics can be kind of all over the place and very, very broad. So this slide is Protiviti's overall approach to establishing a sustainability program. And the reason I like to start off just to show this is because it tries to simplify the different components of an ESG program. And especially through an internal audit lens, hopefully it makes it more simple if you're trying to tackle the topic. So within here, there are 6 main components that need to be the areas of focus. First, for strategy and planning, this is where an organization determines, what is the overall strategy of your ESG program and what is the roadmap going forward look like. This is ultimately setting the foundation of the program and can look at what your organization might already be doing, where is the data coming from, and then what is ultimately being disclosed to the public. And part of this phase is also just to figure out what are the other organizations and some of your competitors doing also. For stakeholder and people, this is going out and figuring out what's important to both your internal and your external stakeholders through engagement activities. So the basis of this component is typically done in the form of an ESG materiality assessment, which is a way to prioritize your ESG topics that are relevant to your organization. For data management and tools, this is simply the management of the ESG data. This also includes using some of the various ESG management applications that are out there, and then protecting your data through effective security processes. Just given the sheer number of data points that are potentially out there, this can actually be a very, very complex component. The governance, risk, and compliance component is the oversight of the sustainability program. So many of us that are sitting in internal audit, we potentially sit here. As ESG gets more complex around the world and from country to country, the compliance and the legal component is also used to monitor the different expectations or requirements that your organization might be required to comply with, especially if it resides in many, many jurisdictions out there. For performance and reporting, this is how you gauge how well your sustainability program is performing through KPIs as well as communication and the disclosure process. A lot of companies out there have just, more recently started putting dashboards or ESG report cards together, and many of the organizations out there also just use various tools. And then finally, for operations, this is just developing efficient and environmentally friendly processes and practices within your operations. This is essentially just making your company better in all things ESG through different examples, such as improving your supply chain, becoming better stewards of your resources. So this slide again just breaks it down into the components that are easy to understand. So this is one way you can evaluate your ESG program through the review of these 6 components. On the next slide, so I've seen a lot of internal audit departments get involved in ESG over the last few years. And you can do so both from an assurance perspective, as well as from just an advisory standpoint. A lot of this actually depends on ultimately the needs of your organization and the maturity of your ESG program as well. If organizations tend to be I would say a little bit more immature in their ESG journey, then you'll find that internal audit tends to jump into projects that are a lot more on the advisory side. And vice versa, if an organization is more mature and perhaps they've been reporting ESG for many, many years, these projects then tend to go more to the assurance side in nature. On the next slide, here are the 6 most common internal audit projects that we've seen or we've performed at many of our clients. Data validation is essentially going out, looking at what have you reported, how do you ensure completeness and accuracy around your metrics. Internal control assessments is going out and looking to make sure that you have actually internal controls that are built up around each of your topics, as well as your overall reporting process. Governance and program assessments, that might be going out looking at what does your ESG infrastructure look like? Do you have specific policies and processes that are in place? Targets, goals, and commitment reviews are becoming more common as a lot of organizations are going out and saying, examples like we want to be net zero by 2030, or we want to, donate X amount of, our funds to social and justice causes. These are all, forward-looking statements that organizations are making. And because of these are forward-looking, that actually puts a lot of organizations at litigation risk. So targets and commitment reviews are actually becoming a lot more common. Then I've seen various internal audit departments jump into doing some level of benchmarking or maturity assessments that's looking at your current state of your program against your future state. And then as the regulatory landscape around the world continues to evolve, a lot of internal audit departments have jumped in and started doing regulatory assessments as well, just making sure that the organization is on track to comply with regulations such as CSRD, or even here in the United States, we have California 253 and 261, which are climate-related regulations. I want to just call out some of the challenges and findings that we're also just seeing from a data validation standpoint, because those are actually the most common projects that we've seen over the last couple of years. And you're going to see, on the right side of this slide, these are just some common challenges that a lot of organizations are facing when they jump into these projects. they're finding that there's not many data owners out there that are familiar with controls. Many of them might be, facilities managers or human resources clerks that don't even know what an internal control is. So a lot of organizations are finding they have to go through and help organizations with training in this area. Then, the other points on here, data sources can be found across the organization and in a lot of different formats or reports that are out there. That's a challenge. And then when you actually jump into some of the individual metrics, there's a lot of assumptions that are made, on some of these certain metrics that the entire organization might not necessarily be aware of. And this is part of the reason why data validation projects are becoming a lot more common. You want to jump in and investigate, some of these assumptions that have been made. And then just finally, the last point around data is, what I mentioned before, is that there might not necessarily be a single system or platform in place. So you're finding that organizations either have a manual process or they're going out and just collecting data from a whole bunch of different functions and a whole bunch of different places. On the next slide, a lot of organizations have struggled with certain disclosures or metrics. So I wanted to go through and list out just some of the few of the most common problematic areas that are out there. GHG can be, again, very complex. Training hours tend to be understated in many cases. Human capital management metrics such as, DE&I, employee engagement, data, they tend to, come with different challenges as well. And then lastly, as I mentioned before, verbiage around, the targets and the goals that your organization might be stating should be carefully vetted by both your legal as well as your ESG steering committee, because again, these carry potential litigation risk to your organization if you're not careful. So again, this slide is just some of the common areas that we've seen around the world that a lot of organizations have struggled with. On the next slide, the approach to internal controls is very, very similar at the end of the day to how you tackle financial controls. As a lot of regulations around the world specifically call out a requirement for limited and then eventual reasonable assurance, the formalization of internal controls is actually going to become an expectation. So a lot of organizations, at least even here in the United States, where we have to comply with Sarbanes-Oxley, we're almost seeing some of these. A lot of people kind of joke around and say that this is Sarbanes-Oxley 2.0 to some extent. So this is something that a lot of organizations should start thinking through in terms of how do we go about formalizing your ESG internal controls? How do we go ahead and put them into a documentation such as the narratives, flowcharts, risk and control matrices as well? So this is something that I would encourage all your organizations to kind of take a look at if you haven't started that yet. And then on the next slide, so this is more of just a summary slide of what we've been talking about. Again, ESG expectations and regulations are, continue to evolve, even in other parts of the world, such as, China, Australia, here and even in South America as well. We've seen a lot of jurisdictions start, putting some of these rules that are out there. So as these regulations continue to evolve, we as internal audit are the risk experts in the organization. So, as internal auditors, we should be informing the organization as these items change. So again, this is just a summary slide that's specifically out there, just to get all of you thinking through what is ultimately your role in internal audit, and how do we get involved, as a function in overall ESG. So I think on the next question, it is a poll question. How have you formulated any plans for 2025 for IA or for internal audit to play a role in ESG? We talked a little bit about a lot of this depends on the maturity of your organization's ESG program. So go ahead and take a few seconds to answer this. Are you primarily as an advisor? Are you primarily as an auditor? do you anticipate your role being fairly equal in both advisor as well as an auditor, or again, or does your organization or does your department have no plans yet for next year? So on this result, I don't see the results up yet. Are they? Okay, there they are. So almost close to half of you have no plans yet. And then actually about 50% of you are either as an auditor or the role can be fairly equal, both as an advisor and as an auditor. I would say, at least here in the United States, 3 to 4 years ago, there was a lot less plans in this. I would say overall, we saw functions, probably less than 20%, get involved in ESG in some way, either as an advisor or as an auditor. And then last year, we probably saw about 50% of the departments, getting involved in some way. So this number continues to just increase around the world, which is an encouraging thing. So with that, I think we're going to transition into the panelists section. So I'll turn it back over to you.
Thank you so much, Steve, for that fantastic presentation. Now we have the panel discussions that we are going to conduct. I think I want to take a minute to introduce our eminent panelists over here. We have Fahad, who is the Chief Audit Executive of Insurance Authority of KSA. We have Dr. Khalil Nimmal, who is the Assistant Professor of Accounting, Gulf University, Science and Technology. We have Satish Narayanan, who is the Internal Audit of Baruch PLC. And obviously we have Steve with us. People know Steve. He's the Managing Director of Protiviti Global. Let me take a minute to quickly talk to you about how, what is the key background that these eminent speakers comes from or eminent panelists are from. Mr. Fahad is the Chief Audit Executive in the Insurance Authority of the KSA. He is a very senior executive with extensive experience in internal audit, risk management, and compliance. And he has held a lot of leadership roles across various sectors and have served as an audit committee member for public and governmental organizations. So welcome, Fahad, to today's panel discussion. Then we have Dr. Khalil. As I mentioned, he is an assistant professor of accounting in the College of Business Administration, as well as the director of Gulf Financial Center. Dr. Khalil is an acknowledged expert in IFRS reporting standards, and his research actually focuses on sustainability reporting, financial reporting, and the most important research part is the impact of corporate governance on the firm's performance. So welcome, Dr. Khalil. Then we have Mr. Santosh, who is associated with Baruch PLC, and he looks after audit and assurance functions and also serves as a part of the internal audit leadership of the organization. He leads a team of IMS and regulatory compliance internal auditors across Middle East, Asia South, and Asia North. So welcome to you. And obviously, Steve, as I mentioned, is the MD with Protiviti US operations, as well as he leads the globe, and he's the global head of our ESG audit for Protiviti globally. So with that said, I think I want to quickly jump into our panel discussion. So Dr. Khalil, my question is really first to you. We have talked about IFRS S1, S2. So how will the role of internal audit team become more important in the realm of IFRS S1 and S2 coming into effect into Middle East? So over to you, Dr. Khalil. You are on mute.
Yeah, thank you. Thank you so much for that. Thank you for this opportunity to let me talk in this panel and this excellent discussion about ESG and the role of IFRS and the internal audit. To be honest, if I want to start, let's talk about why the IFRS is important. Where does it start from? It starts from providing the users of the financial statements with reliable information and relevant information that will make a difference for the users of the financial statements. this was the aim from the beginning of 1973 when the IASC started, then the restructuring in 2002 to move from IAS to IFRS. The normal evolution of the reporting now, it's moving from these to the, what we call it now, ESG, started with integrated reporting, then we moved to CSR reporting, then sustainability reporting. Now we are with the ESG era. This is what I call it. So when we come to the ESG era, we are looking to provide users with more information that helps them to take decisions regarding their investments, regarding what they need, creditors, investors, other stakeholders. Now, what is the role of internal audit within all of these? It's going to be the same as when we talk about the financial role. The financial role to make sure that all disclosures related to financial data, corporate governance, to make sure the reliability, the relevance, the faithful representation of the data. Same here, it will come with the ESG. So when we talk about ESG components, governance, environment, social. So internal audit, they have to make sure these data are reliable, these data are faithfully representative. That means when we report this, when we disclose this information, must be reliable, must be relevant, all of this. This is number one. Number two, the risk management, I think, framework should include already what we talk about S1 and S2. Now we need to encompass our framework to include S1 and S2. I think from my research, from my background, the most important issue is how to force companies to do that. Because, for example, I did research in 2018 about the sustainability reporting in the GCC companies in the Gulf Cooperation Council. We found that during the last 10 years, from all the corporations, only 117 sustainability and CSR reporting were issued. Now, if you look at ESG score on Refinitiv, on Reuters, on Bloomberg, not more than 100 companies out of 700 listed companies report ESG. So how to force companies to do this? For example, the point that Mr. Steve talked about, which is, do we need a system that incorporates financial and non-financial data to be, for example, now, if you look at what, for example, IFRS says, we need to publish general purpose financial statements. General purpose financial statements talks about only 4 statements that include financial data. Where is the ESG from this? Yes, S1, S2, they say that, but how many companies comply with these requirements? This is the main problem. And at the same time, we need to look at not to overwhelm users with more data that they cannot analyze. So yes, we have financial data, we have non-financial data. How can we help users to not be overwhelmed with a lot of data that where we can look at which data will benefit our decisions, which data will not benefit our decisions. I think all of this, if we talk about, for example, data integrity and reporting, this is point. Governance and strategic alignment as well. Where is the role of the governance, the board of directors? I think we need, for example, one of the independent directors to be expert in the ESG and sustainability. So this is very important in our board of directors. Training. Where is the training for the company? I think we have lack of experts in this area. For example, in one of my research also about this area, I did a meeting with, I think it was Ernst & Young. They said when they want to do assurance for the reporting about ESG, they call some experts from Netherlands or UK, from their partners there. So how can we handle this? We have still lack in systems. We still have lack in trainers. We still have lack in experts. So I think the integration, the role of the internal audit comes with all of these areas.
Thank you. Thank you, Dr. Khalil. I think you got in a very important aspect of risk management framework, which also needs to include ESG. So really, I think I quite like that point. Moving on to our next question, and Steve, I'll request you to answer this. So Steve, you have experienced a lot working with companies. What might be some of the challenges that internal auditors will face in undertaking ESG mandate, and exactly what kind of support would they need to integrate ESG into their internal audit process? Over to you, Steve.
So there are a few challenges that come to mind. First, just building up specific skill sets that might be a little bit more technical in nature is going to be a challenge to a lot of internal audit functions. Items like greenhouse gas protocol, some of the different regulations around the world on human capital management. And those are just a few examples. So in certain cases, I do think that it does make a lot of sense if your organization or your function does not have that technical expertise to bring in external help to help out in specifically that specialty need. Then second, and Dr. Khalid, he just mentioned it. Data can be very, very messy in an organization, right? So helping organizations look at that data and then discern whether it's actually being managed effectively in the midst of a whole bunch of different methodologies that could be out there existing. And not only that, the assumptions that are being made by data owners. Like that is something that, is going to be a challenge to a lot of the internal audit departments. And then lastly, just keeping up with some of the different regulations around the world. If you operate, if your organization operates in a whole bunch of different countries, as I mentioned before, this is going to be very, very challenging. So this is where internal audit needs to go out and team up with both legal and compliance. And this is going to be extremely key to the success of the organization. Is this teaming of these three functional areas? And again, it's because of the number of different regulations around the world that just continue to evolve.
Thank you, Steve, for that insight. Let me move on to my next question, and this is for Fahad and Satish both. So the question for both of you is, can you really throw some light on a step-by-step approach internal audit can undertake to integrate ESG into your internal audit process? So Fahad, over to you, and then I'll request Satish to talk also about it.
Okay, thank you so much. Thank you for having me today in this webinar. I'm really happy to talk about this because it's especially for internal audit and how to start. My answer will be a conclusion, from the points mentioned from Mr. Steve and Dr. Khalid. I think the most important thing to start for ESG and include it in internal audit, I think it's assess the current risk, work with the second line of defense, identify and understand the ESG related risk, and the opportunity for the gap of improvement you can do. The second point, which is really important, develop the framework for ESG. There is a framework for all the kind of audit, but today, because of the ESG is a new subject, a new part for our organizations, I think it's important to create a framework with outline and standards for procedure specific for the ESG. The last is not the last, the one important and really important for me is data analysis. Data analysis, even if there is a lack of data, it's supposed to have advanced or expert people to data analysis and make sure that all the data are completed and in the right place. The last point, which is the one usually we done in internal audit, it's reporting. Provide a clear report with the finding and recommendation for the organization will help out to have ESG report and added value to the organization.
Excellent points, Mr. Fahad. Really appreciate that. Satish, would love to get your insights as well.
Thank you. First of all, I would like to thank Protiviti Global for having invited me for this discussion. It's really Good to hear experts from around the world. Thank you, Steve, for throwing light into the American context of internal audit and the ESG challenge that is being posed. I would like to echo a few things. What an internal audit function can actually do to integrate ESG into their process. Points that were highlighted by Fahad, Dr. Khalil, and also Steve, especially on the competence of people. So I will come to that. But before that, internal audit has to set a context. Very important. The context of the organization becomes prominent. When I say context, it is external as well as internal. So an external context would be the region, the type of organization, the industry. So these are some of the external contexts that the audit chief has to look at. For example, it could be regional priorities. It could be the climate agenda that is driving the business, the macroeconomic change, etc. So this is on the external context. Internal context is also important as of how the board, how the audit committee chairman and the members want to take ESG onto the mainstream of the organization. This is extremely important. How the CXOs of the organizations are taking it from a imbibing perspective. How are they integrating it with the financial reporting of the organization? How transparent do they want to be? These are all the internal context. Also, we need to look into how the legislative framework is shaping up, the regulatory frameworks of shaping up. So this is extremely important for internal audit function from an external and internal context. The second very important thing, and I think the eminent speakers have already highlighted, is the competency within the internal audit team. Currently, internal audit organizations are facing the challenge of how to bridge the gap. Because first of all, the expectations are not very clear, not crystal clear. So this would mean that internal audit team should step up, start working closely with the second line function of the organization, like sustainability, HSC, corporate governance. You may continue naming the second line functions. Look out for internal competency, participate in such discussions, engage in an advisory role, and that's an extremely important activity that internal audit has to do. In parallel, the internal audit function should not go out and hunt for experts to join the team and then become overly cost ineffective, I would say. So there could be other tools and techniques in which competency can be brought into the audit team. It could be guest auditor program. It could be so many approaches that the internal audit team can look at. Lastly, the internal audit plan. We have all seen watertight internal audit plans for calendar year shaping up. Internal audit function should be flexible to accommodate the ever emerging challenges of the industry, and especially ESG is posing a huge challenge. It is not that a calendar year starts and then you have an agenda for ESG. If the organization has not done anything from an ESG perspective, internal audit can pitch in and do a standalone ESG review to begin with, and then they can integrate ESG as part of their process audits in subsequent years. So these are some of the techniques or tools that internal audit as a function can utilize or use, taking the agenda forward. Back to you, Nutan.
Thank you, Satish, so much. I think you got across a very important aspect of the things are so very evolving as far as ESG is concerned. I would say, In E, there are various regulations. Under social, there are regulations. Under governance, there are regulations. So with these evolving landscape of these regulations, my question to you is to Dr. Khalil and to Satish again, that how do our internal audit colleagues keep themselves abreast of these changes and support the organization in mitigating any of the ESG risk which comes from the regulation perspective? So over to you, Dr. Khalil, first, and then I'll request Satish to also give his point of view.
Thank you, Newton, for this. Okay, again, I would like to say here, again, we will go with the continuous education and the upskilling. This would help to keep improving and keep developing by regular training, have many sessions, many webinars, all of these to improve the quality of our employees related to this issue. Always also we need to improve and upgrade our regulatory environment regulations related to ESG, that if we did not upload them, update them, and the whole regulatory environment internally and externally, as Mr. Tish said. For example, the exchange commissions, they should be involved in this at the country level to help people to adopt these new standards. Also, we need to, for example, the collaboration with the external auditors. This would help a lot in improving the framework related to the ESG. Also, for example, we need to coordination between different departments within the company as well, not also outside the company. When we say for the sales department, HR, very important role for the HR and the development in all of this. Also, for example, we can use the new machines, AI, machine learning. This would help us a lot, especially with the huge amount of data that we have all the time. As I said, the messy data, as Steve as well said, he used the word messy data that we have because of the now financial, non-financial. All of this, I think, would help us to do. For example, we can adopt international framework like GRI. This would help us a lot, for example, in the development. I think all of these factors, and we can add more as well, to keep and continue developing our framework internally and externally.
Thank you. Thank you, Dr. Khalil. Satish, your point of view, please.
I would like to, again, reflect upon what Dr. Khalil has said. There are two areas that Dr. Khalil has touched upon: the capacity building, basically, enhancing the competence of the team, and secondly, technology. These are the two most important things. There could be several ways and means of how the organization can go out and explore and exploit these tools available. A couple of things which I would like to touch upon when we talk about AI and technology tools. Internal audit team should be wary about the regulations around the organization's IT security aspects, which is also becoming extremely important, because we're talking about information and knowledge of the organization. So this may go to a cloud, and then there could be an information and confidentiality breach. So these are some of the things that the internal audit team has to be cautious about, because the entire organization is looking upon internal audit as experts in these areas. So if you look at effective use of ChatGPT, Gemini, Microsoft Bing, there are several generative AI tools today. Similarly, the organization internally would be coming up with some knowledge management tool. So rather than going out and exploring something new, the internal audit team should also be pretty much aware of what are the AI tools in use within the organization. So use of AI definitely is the key to data crunching and quicker analysis in the future. So exploring AI without any doubt should be one of the things that the audit team should have in their radar. The second thing is on the capacity building. Sorry, I'm taking a little bit more time. Capacity building is extremely important. So how capacity building can happen, it can be driven KPI wise. KPI is a nice subtle tool for organization to say that internal auditors get CPE. That's a mandatory requirement. So how to gather this is participating in seminars like the one that we are having, interaction internally with internal experts, having guest auditors, shadowing them, and then understanding what are the technical nuances. I think, Steve, you highlighted the GHG complications that comes up when we look at the reporting. So these are some of the things which over a period of time, internal audit team definitely has to embrace the AI and technology, and second, upskill themselves with ESG awareness and knowledge. Back to you.
Thank you so much, Satish. I think we've come to the last question of the panel discussions, and this is for Fahad and Steve. After this particular session, what are the 3 key messages or takeaways that you would like to share with the audience? So over to you, Fahad, first, and then I'll request Steve to talk about it.
Okay, great. Thank you so much. I'll make it simple. For the audit team, the transparency is really important. Your report is going to help all the organization, will help the stakeholders, the external auditors, and the people who would like to invest. Also, the people will come after you. So please, your audit report should be include and enhance the transparency in the organization. Second one, I know how it's comfortable to have an audit plan with the defined department and subject, but if you include the ESG is going to be important. So please be flexible and adapted with the new subject and new standards. The last thing, it's a collaboration. As we know, it's a really important thing. It's a new subject. And as I know, today in Saudi Arabia, most of the petrochemical company, they have in their annual report, ESG report, with all this information. So collaborate with the people and the organization will help to have, let's say, a healthy organization and help all the people to have the right information about the organization. Thank you.
Thank you, Steve.
I have a lot of takeaways, but I will keep it to 3. So number 1, I would say do a data review if you haven't yet. Prioritize the metrics related to your most relevant material topics. Some organizations have gone through, especially early stages, they looked at all of them. Others have actually taken a risk-based approach to tackling data. So I would encourage you, if you've never done anything like that yet, I would start with that. Then start thinking through just internal controls related to your ESG program. And this can be, at the end of the day, a very high level, I would say, amount of hours or effort, just because of the sheer number of material topics that are out there. So it is important for your organization to start thinking about this, prioritizing it, and start sooner if you can. And then I would say that the third takeaway is, just educate your organization in the area of ESG risk and internal controls, and go out and train others. And again, we mentioned this area continues to evolve, and internal audit tends to be the front runners in educating the organization and the board as well on these topics. And especially as internal audit, at the end of the day, our internal control and risk experts, teaching many of the people out there, as well as the data owners who are not experts in this area, will be actually key to success, and as well bring value to your organization. And then we also just mentioned that, part of that is there are a lot of tools out there that organizations are using to help navigate the ESG landscape. So even applying your ITGC knowledge to these tools can be something that brings a lot of value.
Thank you. I think this is really wonderful. I'm just cognizant of the time, as Kapil and Sanjay, and I don't know how much time we have to take questions. But over to you, Kapil, Sanjay, in terms of seeing whether we should take questions or whether we should wrap it up, because we just have 3 minutes left. You're on mute, Kapil.
So we have a few questions that people have posted on the chat. So maybe we can look at those quickly. And then maybe we can request Sanjay to give the closing remarks.
Sure.
So we have one question here. I'll read out the question, Nutan, and maybe you want to take this. How can companies effectively integrate ESG principles into their overall business strategy without compromising on profitability?
Okay, good question. I think anyone wants to take, or I can take it. Steve, you want to take that question?
Going back to the various components of an ESG program, your organization is already doing potentially quite a bit in the area of ESG, even though a lot of organizations might not necessarily call it ESG. So when you actually take a look at your organization's strategy, and then on top of that, you take a look at your ESG strategy, many times you do want to go through and make sure that those objectives do align. A lot of organizations might be, thinking in a lot of ways, ESG is really expensive to implement. There's just so much to get done. There's so many resources, but it doesn't have to be. A lot of organizations, and you can take a look at some of the best in class organizations out there, they actually use ESG to assist with the overall profitability of the organization. You look at some of the organizations like the Patagonias, of the world, the Amazons of the world, and there's a lot of organizations out there that actually use sustainability for this. So, at the end of the day, I would say, take a look at the strategies there, just make sure that they're aligned, and your organization, many of the, top executives within your organization that actually help drive profitability are also the ones that sit on the ESG steering committee. And if they're actually different people, then you should ask the question as to why they're different people. They should actually be aligned in many ways.
So can I just add one more aspect to it is, we always feel that ESG is not only risk, but it is also about opportunities. And I think when we support our organization in terms of developing the ESG strategy, I think this is one of the most important aspects that we really focus on is how is ESG as an opportunity for organizations. And believe me, there are a number of examples that we can share with you, depending on the sector that you are in. What is going to be the future trend or the future foresighting with respect to a technology change for that particular sector, purely from an ESG perspective, and how can you be the front runner in terms of really capturing the future market share of the business. So I would say definitely, and that's what also brings a lot of profitability to the organization as well as the growth. So one message that I want to leave with the audience is ESG is not only about risk, it is really also about identifying opportunities and helping to strategize your business with respect to those opportunities that you find. So, yeah.
Thank you, Nutan. Thank you, Steve. There's a couple of folks have asked a question on is IFRS S1 and S2 mandatory in the Middle East region, or has it become mandatory in the Middle East region? Is there any timelines that we can really look at?
I think Dr. Khalil should.
Yet it's not. They are not mandatory. And I don't know if within the foreseen future we can see these to be mandatory. It takes time. I think I doubt to be within the coming 5 years mandatory. Many of the vision of, for example, if you look at the vision of Saudi Arabia, UAE, Kuwait 2030, they will encourage, most of them they encourage. But to make it mandatory, I think there are many obstacles that they need to get over it before starting to make it mandatory. But within the coming 5 years, I don't think they will be mandatory. We hope so, but it's not that easy.
So, sorry, but I have a little different point of view, Dr. Khalil, on this. And
okay.
And I would say, we work with we work with one of the larger international financial institution, which is Asian Development Bank. And for one of the Central Asian countries, I think there was a large line of credit given to the government in terms of a lot of transformation. And I think the bank really made it mandatory that the government needs to really sign off on IFRS S1 and S2 reporting perspective, because they wanted that particular country and the organizations over there to be investor ready. And I would say that came as a reform exercise, and the government really aligned with respect to implementation of IFRS S1 and S2. And this is Uzbekistan as a country, which from an economic perspective is way below as compared to the other countries that we have in the Middle East. But I'm just trying to say there are a lot of investor pressures. There are a lot of international financial institutions who are pressurizing governments to take action as far as IFRS S1 and S2 is concerned. So my request is to all my companies here in the Middle East is it's always better to be prepared rather than be late in terms of aligning with things. And it is a journey, so not expected that you get prepared right now, but take a step-by-step approach in that direction and get prepared.
So do you expect this will be within the coming 5-10 years, or?
That's my personal comment. I expect it to come in the next 1 or 2 years for sure. So that is my personal comment. Yeah.
I can understand. Yes.
If I may add here, one of the driving factors is also companies going publicly listed. So the regulators here, especially in the Middle East, for example, in UAE, ISCA regulation requires disclosures, and definitely those disclosures are aligned to IFRS S1 and S2. So this is one point. Second, we are breaking regional boundaries, Nutan. So it's not about Middle East, it's not about Asia South, it's not about Asia North. Today we have companies which are bigger than countries put together. So it's irrespective of the region that we speak, ESG has become one of the first or the top agenda of companies. So this is the driving force, and companies can drive regulations to the positive direction. So that's something that.
Good point. This is good point. Yes, I agree with you about this, because, for example, one of my research was about ESG disclosure. The main companies that do this were the companies that connected with parent company internationally. Yes, this is one of the main drivers. But to make it mandatory, I think from my point of view, it will take time. According to what I look at the market and what they are doing, it will take a little bit more than maybe my personal.
Agreed.
More than 5, at least.
Absolutely. Yeah.
It will take to make it mandatory. Yes.
Right. I think we are really at time. So Sanjay, over to you to give the closing remarks.
Thank you, Kapil. And first of all, thank you everyone for joining the webinar. And I would also like to thank the panelists, Fahad, Dr. Khalil, and Satish. And thanks to Steve, who has joined early morning, first thing in the morning, attending the webinar, doing this session for us. Thank you very much. So just to reflect on what I think the discussion was, I think one thing is, as internal auditors, it's very important that we should also raise our awareness on ESG. I think that is one thing. And I think relating back to what all the panelists said, one point which stood out was upskilling ourselves, right? Upskilling us in order to even make sure that we can create awareness within the organization on ESG, importance of ESG, the risks which ESG poses to the organization. I think that's very important. And how do we have that mindset of not only assurance, but also having a proactive mindset of advisory mindset? I think that is important, especially when it comes to ESG, because this is evolving. And as employers, I think we can play a solid role on the advisory element to help organizations build their ESG programs, as well as giving that assurance. So with that, thank you very much for your time, and thank you for joining. We will be sending out an email with our contact details as well as the link to the recording. So please feel free to share. Thank you once again. Thank you, everyone. Thank you for attending.
Thank you, everyone.
Thank
Bye.
you.
Thank you so much.
Thank you.